A weak rupee continues to pressure stocks which opened weak but steady after the fall amidst expectations of some volatility due to the weekly expiry on the NSE. Financials and healthcare are the big drags while telecom stocks see some green. The rupee continues to slip to a record low against the dollar, making it the worst performing Asian currency this year. Disappointment over a delay in concluding the US-India trade deal and continued foreign investor selling continues to weigh on the currency. Wockhardt chairman Habil Khorakiwala says Zynic can notch peak sales of $2 billion globally. He hopes to get an approval from the US FDA in the next 4 to 5 months and believes that Wockhardt will enjoy patent protection for the next 10 years. Telecom Minister Jyotiraditya Scindia tells CNBC TV18 that a proposal from Vodafone Idea on AGR relief is awaited and the government should be able to review and recommend relief in about 2 weeks from now. He clarifies that any other telecom company seeking similar relief will need to approach the Supreme Court. And quelling concerns over privacy fears following a circular calling for all phones to host the centre's Sanchar Sathi app, the telecom minister clarifies that registering the app is optional and users will have the right to delete it. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I am Hormuz Fatakia, and yet another day when the markets are at the lowest point of the day, pressured by the currency. The Nifty has now broken below key support levels. We were talking about 26,100, 26,150, convincingly below those levels now at the lowest point of the day is where the index currently stands. And every intraday recovery that we have seen today has been sold into. We saw one between 10 to 11 that got sold into, and that very brief recovery that we saw just a few minutes earlier has been sold into as well. Reliance Industries, ICICI Bank and HDFC Bank, the three index heavyweights turning out to be the biggest drags on the Nifty today. HDFC Bank and ICICI Bank, of course, for reasons of their own, but Reliance Industries, of course, contributing 33 points to the downside on the index. The broader markets, surprisingly, have remained relatively calm amidst this sell-off, as has been the concern over the last few days. But even now, the mid-cap index has now slipped to the lows. 0.2% lower, yes, but significantly off the highs of the day. It's almost a 300-point drop from the day's high. And the small-cap index, too, has seen a drop of over 100 points from the highs of the day. Just pull up the rupee and the advanced decline. Of course, the line continues to widen. The gap continues to become a bigger yawn in favor of the declines. The rupee comes into the picture now. 89.86 is currently where the currency stands. 89.95 was the intraday low, inching closer to the 90 to the dollar mark, marking a 35 paise or a 0.4% fall today. The reasons continue to be the negative sentiment from the FPI outflows. The RBI is believed to be supplying dollars, but in modest amounts. Lata is here with more on this. Lata.
Well, first the numbers, 89.50 overnight, and now 89.95, so pretty close to the 90 mark, about a 40 paise fall or a 0.4% fall. Could become even a 0.5% fall. The slide is, the reasons are not new. The reason why the rupee has been the worst performing currency and why it has fallen with some accelerated pace since mid-November are both the trade deficit and the capital outflows, the capital account deficit. From November 18, the fall has accelerated because that day we realized that the October trade deficit is $41 billion, which means the US trade deal is now beginning to bite. The fact that the trade deal was not signed all through November has kind of accentuated tensions or at least worries within the exporter-importer community as well. And those who have open positions or those who had to buy dollars, importers, are now rushing in to buy, which explains the accelerated fall in the rupee. What we hear from dealers today is that the Reserve Bank doesn't appear to be supporting any level. It is just, graduating the fall so that probably a market-determined cheaper rupee will correct the current account deficit, the trade deficit to some extent. It will make the Indian exporter more competitive and it will make imports more expensive and thereby protect domestic industry. So it's just allowing the rupee to find its level, but only graduating that fall. An important positive that many dealers pointed out, or at least a few dealers pointed out, is that it's not the Reserve Bank alone which is applying dollars. closer to the 90 rupees per dollar mark. Even exporters, others are supplying, giving the impression that the market itself feels that things have gone far enough. So the hope is that around the 90 mark, the rupee will have seen a bottom, at least for the near term. But who knows, I could be speaking too soon.
Well, Lata, thank you for that update there. Still closer to the mark of 90 to the dollar is where the currency stands. Earlier, we did speak to some experts on the slide that the rupee has seen, and we also asked them about a possible impact of a trade deal with the United States on the currency. Listen to what they had to say.
I do think 90 is very much on the cards for the rupee. Look, I think the biggest factor is us not having a trade deal, at least by the expected timeline. Now, there's a whole lot of uncertainty as to when the trade deal would happen, which means that not only a future economic growth is at risk, of course, we are also experiencing a widening of the current account deficit. Capital flows remain deficient. So all of that point to an adjustment in the currency, which is also warranted from an economic perspective. I therefore do think until we have a trade deal and we know its fine print is actually favorable for India, the rupee should continue to weaken at a moderate pace.
I'm not seeing, there's a lot of expectation about the US trade deal getting done, and that's sort of getting built in. And that's the reason rupee is not really flown. So in case there's any negative news, then I think you can really see a spike. I was also talking from a technical angle. I think because it's already breached the all-time lows, the rupee, I think it has a potential to go anywhere between 90 and 92. I'm not saying it's a done deal, but it's a probability which I will lay almost 60-70% weight on that.
I don't think that the rupee in itself is the dominant driver of the interest rate decision. I think that, if you recall, even in February, earlier this year, when the rupee was close to or had just breached 88 levels, the RBI, went ahead and started its rate cutting cycle. So, I do believe that while, yes, rupee volatility, rupee pressures are important, I don't think that they are the dominant factor. I think that the RBI, the upcoming policy, will perhaps focus more on assessing what is happening to domestic growth, not just in terms of what has happened so far, but also perhaps be a little bit more forward-looking. Try and assess the implications of US tariffs, since we still don't have a trade deal. I don't think that the rupee in itself is the dominant driver of the interest rate decision. I think that, if you recall, even in February, earlier this year, when the rupee was close to or had just breached 88 levels, the RBI, went ahead and started its rate cutting cycle. So, I do believe that while, yes, rupee volatility, rupee pressures are important, I don't think that they are the dominant factor. I think that the RBI, the upcoming policy, will perhaps focus more on assessing what is happening to domestic growth, not just in terms of what has happened so far, but also perhaps be a little bit more forward-looking. Try and assess the implications of US tariffs, since we still don't have a trade deal.
Shifting focus now to the crypto space, where an intense sell-off is currently underway. Manisha is here with more on this. Manisha.
Oh, well, absolutely. If you look at the last 24 hours, the cut only has gotten deeper here. With the way what we've done in the last one day has been the biggest one-day decline that we have seen since the month of March there. So take a look at the overall numbers then, and the market cap for Bitcoin or other cryptos has declined to below $3 trillion now. The all-time high that we've done in this year has been to the tune of 4.4 trillion. So clearly a very sharp decline coming in as far as the money seems to be moving out of this space also. If you look at overnight, again, it's 16 million worth of longs liquidated in past 24 hours when it comes to Bitcoin. But when you talk about the overall exchange liquidation, that number is quite huge, to the tune of $400 million there. Well, we have seen decline in futures volumes and open interest as well, telling you exactly that the money seems to be rotating out in the other asset classes, but not staying in crypto, is what we've seen in the last couple of days here. Well, the sell-off in crypto has resumed for the month of December. The risk-off sentiment that we have seen in broader asset classes seem to be impacting this space as well. And when you look at the shares in digital asset-related stocks in the Asian markets, well, they clearly have declined quite sharper. And this has come in after the People's Bank of China warned of illegal activities relating to digital currencies, and that has led to a sell-off across Asian markets within exchanges there as well. The other thing that the street will watch out for is the Bank of Japan on whether or not it hikes interest rates. The bond yields in the meanwhile have hit a 15-year highs, impacting this space as well. If you look at the overall large leverage positions, they still are holding, telling you that a further decline in cryptos from here on, if any of these positions were to unwind, could be even deeper. So leverage across Bitcoin exchanges is up to 200 times in some of these instances. If you look at the crypto futures therein, there's an estimated $787 billion of outstanding leverage there as well. And when it comes to ETF, well, the outstanding positions on that one are to the tune of $135 billion as well. When you look at the last 1 month, the cuts have been quite deeper. As you can see, whether it's about Bitcoin, Ether, Polygon, we're down anywhere between 20 to 30% on this. And that pretty much has been the case with other high market cap cryptos, where you have Cardano, Solana, Binance down anywhere between 13 to 30% yet again. So the last 1 month, last 1 week, the current year, all trading into the negative for many of these cryptos.
Manisha, thank you for that update. Worst day for Bitcoin since March, and now below the mark of 85,000 is where the cryptocurrency fell to. Take a short break. More news and updates on the other side. Stay tuned. Welcome back. Some recovery seen in Bajaj Housing Finance from the lows of the day. At one point, the stock was down almost 9%. And since then, the stock has recovered ever so slightly from the lows of the day, still hold losses of around 6% in today's session. And of course, this comes after the block deal that took place today. Promoters were the sellers, and from its post-listing high of 188, the stock made a 52-week low of 95 rupees. And that means that the stock from the post-listing high is down 50%. It has halved from those levels. Remember, Bajaj Housing was the most bid IPO of the country at one point of time when the issue came out in September of last year. 7 times was the retail subscription. The overall subscription stood at 63 times. The plates need to be flipped here. And of course, the bigger factor is that even after selling the 2% stake that the promoters sold today, they still own over 86% in the company. So even then, there is still this overhang of promoters likely to sell another 11% stake to be compliant with the minimum shareholding norms, which lies around 75%. So mutual funds don't have any significant stake in the company. Who has it? The retail investors. Now, at the time of listing, the retail investors in Bajaj Housing stood at around 17 lakh with around 6% holdings. That number within the next quarter itself, and that is when the stock had moved from 70 to 170 and then about, and that number had moved to 26 lakh. Currently, the number stands at 24 lakh, but the retail shareholders have around 8% stake in Bajaj Housing. Of course, promoter stake sale remains the biggest overhang, as and when the timeline as to when that will happen. The stock is now nearing its IPO price, that is 70 rupees, and the promoters, more importantly, are selling stake when the stock is at a 52-week low. So that is something that needs to be taken into account. It will be interesting to see who are the buyers in today's transaction. But for now, Bajaj Housing, one of the casualties of the day, 6% lower on the stock. Now, sources are telling CNBC TV18 that Mastech's promoters are looking to sell some stake in the company. Rachna, who had this news break in the morning, is joining in with more. Rachna.
Sources tell CNBC TV18 that Mastech Promoter Group is exploring the sale of nearly 20% stake in the company. Now, this is significant because of the promoters currently holding about 36%. So, the sale being contemplated is more than just a routine dilution. It could meaningfully reshape the shareholding structure. What's also noteworthy here is the pricing. Now, people in the know say that the promoters are seeking a premium of up to 25% over the current market price. Now, what we also understand is the timing of this sale that has 2 big triggers. First is succession planning, and the other being the broader effort to bring leadership stability after a year of major top deck changes. And that's important context because Mastech has been through a transition-heavy year. The company appointed Umang Nahata as the CEO effective January 2025. The finance function has also seen back-to-back leadership shifts, where Raghavendra Jha became the CFO in May 2025 and Deepak Keria took over as CFO in November 2025. So the potential stake sale is being viewed by many as a part of a larger reset and the one that aims to give the company a steadier foundation as it leans into its next phase of growth. According to sources, the promoters are also sounding out a mix of strategic investors and long-only institutional funds that align with Mastek's revenue footprint, where nearly 65% of the business comes from the UK and Europe. Mastek was founded by Ashank Desai, Ketan Mehta, Radhakrishnan Sundar and the late Sudhakar Ram. As always, we did reach out to the company for a response, but Mastek declined to comment on CNBC TV 18's queries. Back to you.
Rashna, thank you for that update. And Mastek, after the news, beg your pardon, after that news break earlier in the day, the stock had surged almost 4%, has come off the highs since then, is now back around the flat line. Now, Wockhardt is the other one. The stock was up almost 20% yesterday, extending those gains in today's session as well. That's after the US FDA accepted its NDA for Zynic. In fact, Wockhardt chairman Habil Khorakiwala said that Zynic can notch peak sales of $2 billion globally. Listen into what he had to say.
For the first time, for us and for India, a new drug application has been accepted by US FDA. And they normally would clear this drug in 6 to 8 months. So sometime middle of next year, we accept its approval in USA. And I think we need another 4 or 5 months after that to really introduce and launch the product in US. There's only evaluation by US FDA of our clinical trial and other scientific information. And they are visiting us to check up on the scientific information and visiting some of the sites where we have manufactured this product. This drug has proved a remarkable efficacy and safety, because one of the important things in antibiotic is normally not given for a week or two. It was given longer time because the patient came at a very last stage. Actual market potential is about much more than that, but we expect that our drug should do about $1 billion or $2 billion of usage worldwide. US generally contributes 40% of the global market. So the Western market will contribute about 75% plus of the global revenue, and the balance will come from the other countries.
Off the day's high is Wockhardt, but still holding on to gains of around 2%. On to a CNBC TV 18 exclusive then, Telecom Minister Jyotiraditya Scindia has said that the government is awaiting a formal request from Vodafone Idea seeking relief on the AGR dues. When asked about Bharti Airtel, Scindia clarified that any other company seeking similar relief must approach the top court. Listen into what he had to say.
Ask you about the big development that has come from the Supreme Court, with the court saying that the government can go ahead and reassess all of the AGR dues of Vodafone Idea. Having said that, what next is the government planning to do? What are the options?
So, post that judgment, which is what is being examined within the department today, we are also waiting the formal request from Vodafone. Once that does come through and we complete our evaluation internally, we will then put forward our recommendation of what can be done and what cannot be done.
Bharti Airtel has also requested the government for reassessment of all AGR dues. Are you considering the same?
Well, no official request has come to me as of now. In the event that they would pursue that, again, that is something that the court of the land will have to decide.
When it comes to waiving off or reducing the AGR dues for Vodafone Idea, would this be specific to one company, or whatever kind of resolution that you come forward with, relief package that you come up with, it will be for everyone?
The Supreme Court judgment is qua Vodafone India. So whatever we come up with has to be qua Vodafone India. We cannot cross the border of the Supreme Court judgment.
So you feel that the question of parity for the whole industry doesn't arise here?
As I mentioned, the Supreme Court has made a verdict on Vodafone India, and that's what is on our table today.
So very simply put, any company which wants similar relief, they will have to approach the Supreme Court.
Absolutely.
Now, the Department of Telecom has mandated that all domestically manufactured smartphones will have to pre-install the Sanchar Sathi app on new devices. The smartphone manufacturers have a 90-day window to comply with the directives, and devices which are in transit or already in the distribution chain must receive the app via software updates. Now, the Sanchar Sathi app will have access to data including all files and call logs, messages and photographs. The Telecom Minister, however, clarified this morning that registering on the app was optional and users had the right to delete it from their devices. Listen in to that remark.
अगर आप चाहते हो तो इसको आप एक्टिवेट करो, अगर आप नहीं चाहते तो इसे एक्टिवेट मत करो। सुनिए ना, अगर आप इसको अपने फोन पे रखना चाहते हो तो रखो, अगर आप इसको डिलीट करना चाहते हो तो डिलीट करो। कोई मैंडेटरी नहीं है। आप अगर रजिस्टर नहीं करना चाहते हो, मतलब कि उदाहरण के तौर पे इस ऐप का उपयोग नहीं करना चाहते हो, तो रजिस्टर मत करो, वो डोरमेंट रहेगा। डिलीट करना है तो डिलीट कर लो। पर क्या हो, एक मिनट, पर हर व्यक्ति को देश में नहीं मालूम कि मुझे फ्रॉड से प्रोटेक्ट करने के लिए, मुझे चोरी से प्रोटेक्ट करने के लिए ये ऐप है, तो हर व्यक्ति तक ये ऐप पहुंचाना हमारी जिम्मेदारी है।
And as we slip into a short break, here is some good news for our viewers. India's business news leader is now on your fingertips, and that is the CNBC TV18 all-new app. You can download the app from the Apple Store or the Google Play Store to access breaking news, in-depth articles and financial world updates at your fingertips, or you can even scan the QR code that is up on your screens. We take a short break. We'll be back on the other side. Welcome back. On to some updates from the cyclone Ditwa. Chennai and regions in North Tamil Nadu and South Andhra Pradesh have been placed under red alert as cyclone Ditwa triggers extremely heavy rainfall across several districts. The IMD has said that the weather system is likely to shift towards the southwest and is expected to weaken into a depression within the next 12 hours. Schools and colleges remain shut in Chennai. Take a leave on this edition of Business Lunch from me and the team. Thank you for watching. Midcap Radar on the other side.